Hey, what's going on, guys? So in this video, I want to give you a review of my portfolio. Expiration is today, and these options are about to expire in a little bit. And specifically, I want to talk about Meta. So for Meta, I actually ended up making a really big profit of $1,230 by using call credit spread. So in this video, I just want to show you what I'm currently holding, kind of open things up, because typically I only cover this on Discord. So if you actually want to see me make all my plays live so you can follow along with them, that would be the first link in the description, where me and you can chat for free more about seeing every single play that I make. Now, what I did for Meta was I did call credit spreads. The reason I did this was because I saw the writing on the wall. So looking at Mark Zuckerberg, he's kind of a clown. He's not doing anything good nowadays. I mean, Instagram is going down. It's not growing. Facebook, younger generation is not really using it. Some people don't even really know what it is. So the platform is pretty much dying, and honestly, looking at their ads, they're just overdoing it. Like when I scroll on Instagram myself, I get hit by like 2 ads in a row, and I can see that they're going for a money grab because they're in a really tough time. Snapchat's in a really tough time, and honestly, Google didn't do so well either. Actually, I was really surprised to see YouTube kind of falling. So check out this trade on Meta. I sold the 150 and then I ended up buying the 155. I made $1,230 because I can pretty much see that Meta is in bearish territory. I think that it was going to have bad earnings, and confirmed they had really bad earnings. So this is how you can profit from tech stocks falling, or really, this is just how you can profit in a bear market. Bear call spreads will help you make money when the times are tough. When the market is in a bear market, you use bear call spreads. I'm going to show you an example of doing this on another stock, but first of all, I had this option that was expiring on the 28th, which is today. I usually do bear call spreads during earnings actually, because they're very expensive. They have lots of implied volatility, and you can make a lot of money. So I actually ended up selling this on October 24th. So 4 days ago, it was $1,230. I opened up 15 contracts. So this is about $1,200 gain on about 7 grand. So this is very small account friendly, about a 1/7 return. So roughly around 15% in 1 week. 15% in 1 week is amazing. So this is a position that I have on Meta, but also this is a position that is really across a lot of my portfolio. So I have it on Adobe, which I am down on. This is a rare time that I'm losing on Adobe, but typically call credit spreads have absolutely nailed it in this market environment. I am also running call credit spreads on Airbnb. You can see right here, I'm up $290. Actually, the reason why I got into Airbnb was because I use this software called OptionsFi, which I am a contributor to. It's also in the link, but for OptionsFi, I saw this being recommended as a call credit spread, and I was like, that's really interesting. So this ended up going really well. But generally, the reason why I would open up call credit spreads would be on an expensive stock and on lots of technology stocks. So that's why when I saw this play, it was basically a no-brainer. When I saw that idea, I was like, yeah, I'm gonna do that. So Airbnb, Adobe, Meta. I also have an Iron Condor on Netflix, and I'm up $100 on this. We just opened this up this week actually, so we can probably close this out for a really fast gain. We opened this up a few days ago in the Discord. But the reason why I got into an Iron Condor on Netflix was because I saw it was in the middle of its Bollinger Band, and I don't think it's gonna rise too much or fall too much. So far, we are killing it there and doing pretty good. Now, you will notice that on some positions I am down, but this is a covered call, so I'm actually not down because I'm ready to sell Apple for $145 per share. And I actually have Apple shares. They're up pretty large amount, 7%. So Apple reported earnings, so it's up 7%, which is really interesting because it started off the day not really up that much. So started the day pretty flat, and I was actually expecting Apple to fall a little bit along with Amazon, Meta, and basically everything else, but it does seem like it is picking up a lot of steam. And this is actually where I would probably get into the position by using the poor man's leap. If you want to check out a video on that, I will also link that below, or I'll have it at the end of the video. But a poor man's leap would take advantage of Apple because you can get into the stock by buying a leap option without having to put up $15,500. You can use a lot less money up front. I do have an average cost of $147, and I have sold a call option. I've actually sold many call options, but now it does look like I'm going to lose the shares. And that's fine. I'm ready to lose the shares, and I've made some money on Apple long term. Now, what I want to show you is opening up a call credit spread example, because that's very important. Most of you guys probably want to see me open up an example, actually go through the example, show you how I would close it. So let me go through that whole process. And actually, Let me actually just show you how to close real fast because I talk about that in a lot of my videos. And Adobe's actually at a loss right now. So I'm actually going to close this for a loss. I mean, I have some losses from time to time, and this is just a loss. Adobe is currently at $324 per share, so I'm actually going to live close this trade right before your eyes. So $324, it's in the money by about $2, and I have 5 contracts. So yeah, I'm supposed to be down roughly $1,000, and it is roughly $1,100, but I'm only down $730 because I did, sell this for an initial $77. So what I'm going to do is I'm going to close, and I'm going to close 5 contracts for a loss. And basically, this is how I close positions. Typically, I don't have to close because they expire out of the money. About 90% of the time, or maybe even higher than that, I am just leaving my options to expire completely worthless, especially for my spreads. And even for a lot of my other picks, like selling puts or covered calls. But specifically for spreads, I'm selling out of the money options with a very small delta, typically 10 to 14 delta. And because it's so far out of the money, they'll typically expire for absolutely nothing. But because here, Adobe is right in between those strike prices, I do want to close this out. Otherwise, I may have some risk here of being assigned, or Robinhood will just close it out for me for a not favorable price. So what I'm going to do, I'm going to put in $2.25. I'm going to pay $11.25. I'm going to review this, and I'm going to close this trade right here, release my capital, call it, quits on Adobe for now. It did go outside of the range that I expected. So there you go. I closed it for a little bit of a loss. And again, that happens, but if you look at my portfolio, I'm actually doing really, really, really well. My portfolio is up to 1.936, which is amazing during a bear market. In fact, this has been a really, really tough time. I just had to really hedge and just do my best. And one of the best strategies that I have is the bear call spread. I have a ton of them on my portfolio. So for example, actually for Meta, you'll see here that I'm not going to close it. And the reason for that is because I don't really need to. It's at 100% gain, and closing it would just cost me some money. And because Meta is at $99, this is just gonna expire out of my account today, and it's not gonna be in my account anymore. So now what I wanna do is I do wanna open up another call credit spread because the market is up so much. So what I wanna do is I wanna play on that because I do think that we're still in a bear market. I don't know if we're just gonna recover and things are gonna be fantastic again. I don't know, right? I don't think so. I think we're gonna have a lot of bear market rallies, but you gotta be as protected as possible right now. And call credit spreads just add a lot of alpha to the portfolio, meaning that when the market goes down, you can still make money. So what I'm gonna see is SPY, Apple, Amazon. I wanna sell call credit spreads, and I'm trying to do some research right now and kind of think about where I wanna do this. So here's my watch list, by the way. You should really check out this watch list of stocks and put them on your own watch list. So if you have to, pause the video. These are a lot of stocks that I like to follow because they have good volatility. They're amazing for options. So my watch list right here is really, really good. Snap is on the uptick, Pins, Nike, Oatly, Tattooed Chef, which I don't have, but I like to watch because Uber, Airbnb, Palantir, Adobe. You know what? I did close Adobe for a loss, but what I can do is I can actually do another call credit spread. Now for Adobe, I'm kind of bullish long-term. I actually use them for editing myself. However, I think that they're really overpriced in terms of their price to sales ratio. They are on the uptick though. They are trending higher though, so I want to be careful. However, I don't think that the stock is going to go past $368 per share. In the past month, they have had a really, really good run, up 17.31%. Well, what I'm going to do is I'm actually going to sell some more call credit spreads and kind of be bearish again because the price of sales is really high. Now, for a bear call spread, I typically go out 1 to 2 weeks. So I'm gonna go out 2 weeks right now to November 11th. If you're watching this video in the future, again, you can always just go out 2 weeks. You don't have to do this on Adobe. You can do this on really any stock. What I look for is actually a chance of profit of around 85 to 90%. And that is going to be right here around $350 per share, but I probably want to go for $355. Now, if I expand this option right here, what I'm looking for is a decent bid-ask spread, meaning I want it to be tight. This is not ideal, it's not that good. So for example, for Apple, it might be 118, 119, or 119 and 122, right? Really, really close. This is not as close as I'd like, but it's also not that bad. The volume is not that high, which is also unfortunate. So what I'm gonna do actually is I'm gonna go out to November 18, and that's because options traditionally do expire the third Friday of every month. So what that means is typically going to have more volume. And let's see if that is true or not. So if I go to 355 right here, yes, I am correct. So it is 58 volume here, much better. And the bid-ask spread is a little tighter. It's only $11 apart. So you know what? I am going to go for November 18th. And that is because, you know, since options expire every third Friday of the month, they typically do have more volume and more open interest. So what I want to do here, this is an 87 chance of profit. The delta is 16, which is pretty good. It's pretty low. Honestly, though, I do want to be between 10 to 14. So this would be a little bit more ideal for me. So I'm gonna go ahead and sell the 360 right here. This is super safe, super small account friendly, and this is still gonna be a high return. So selling the 360, then I'm gonna buy the 365, small account trade right here. This is gonna be less than $500. So $456. And as you can see here, I'm gonna be collecting about $44 in premium. Now, because I'm collecting $44, I'm risking $456. Some would say that's not really a good return. Why would you risk $450 to collect $46? Well, let me tell you. What if I told you this? You can basically make $50 if you correctly throw a piece of paper in the trash can 10 times in a row, 10 feet away. Probably not gonna happen, right? Have you been in an office and you just throw, you crumble up a piece of paper and throw it across the room? Sure, you'll make it, but will you make it 10 times in a row? Probably not, right? In fact, you'd probably only make it like 2 or 3 times. And here, the statistics is it's only gonna happen 12% of the time, meaning you're gonna lose on this trade about 1 in 10 times. 9 out of 10 times is gonna be fantastic. So 9 out of 10 times you're gonna win, and the 1 out of 10 times that you're not gonna win, you can always close that off, just like you saw me close it out for Adobe, and I didn't lose the full amount. The total amount that I could have lost was actually $3,700, but I only lost about $700, meaning that if you win this 9 times, you're gonna make about 360 bucks. And then if you lose 1 time and you close it for maybe a $100 loss, you're still up about $260, okay? Amazing, amazing returns. Actually, you can basically double or triple your money every few quarters. So that means every single quarter, about every 10 weeks, you can make $260 on about $450. That is a more than 50% gain in a quarter, and in a year, that's going to be more than tripling your money. And in a year, well, you tell me, you can do the math. That's a really big return. So specifically selling the 360, buying the 365, the chance of profit is very high, okay? About 12 delta, so your chances of profit is gonna be about 88%, or roughly 90%. And what I'm gonna do right now is I'm gonna open up this trade. I'm gonna collect about probably $40, we'll see. I'm gonna open up 5 contracts right now, and I'm going to sell for about 0.43. Let's try 0.43 and see if we get filled. So $215, about a 10% return in actually 3 weeks. Really high return. Boom, so I just got filled. So I sold 5 contracts, collected $230. If you want to follow all my trades, make sure that you click that link below so you can follow everything I do live, and so you can basically fill your pockets with a lot of cash, see exactly what I do, and I'll be available for you 24/7 in my coaching academy.